So is Penrith worth the wait?
Overall, we'll view it as overall we'll score it at.
Welcome back to Property Insights. I'm Jen.
I'm Ray,
and we are
you're
from
Squarefoot Property.
Okay, today we are diving into the brand new kid on the block, the Penrith. It's launching this October after a 5-year drought of new launches in Queenstown. We'll break down the fundamentals, highlight the opportunities and risks, and finally give you our honest ratings, so you know if this project is really worth waiting for.
Yep, that's right. So here are the quick facts. Developer Hong Leong GuocoLand. Total units 462. Tenure 99 years from November 2024. TOP 2029 but not later than 2031. So there are total of 2 towers, 40 story each. Orientation. All the units are north-south facing. Mix of units, 2, 3, 4 bedrooms, 8 types in total. The site area 9,522 square meter. Only 3 minutes fully sheltered walk to Queenstown MRT station.
Wait, let's talk about the pull factors of this project. Mainly, it has a low site coverage of less than 50%, with residential levels as elevated above the road, meaning less density and better communal facilities compared to Sterling residences, Commonwealth Towers, and Queen's Peak.
Yep.
And it has a smart unit mix, heavy weightage on the 3-bedroom types, about 42% of the total units, making it more affordable for families and own-stay buyers.
This is also the last plot of land, which is nearest to Queenstown MRT station. So this is actually a huge positioning edge against all the other plots of lands that will be launched in the future.
Last but not least, there's a strong resale demand in Queenstown condos because it shows healthy annualized gains and profitability across both new and older projects, as what we can see here. A pool of million-dollar HDB upgraders nearby also form a ready demand base. And if you look at the latest news in June 2025, you can see Queenstown 5-room HDB that is setting a record at 1.658 million.
Yeah.
And you were saying it's not even a high floor.
Yeah, it's just a mid-floor unit transacted at 1.658 million. That's crazy. Yeah.
Can't imagine next time our next generations, how can they actually afford housing next time?
That's right.
There's also consistently strong rental demand, which thanks to the proximity to CBD and One North tenants.
Yep. One more bonus. The units that are facing the north enjoy permanently unblocked views, towards the Dempsey and the Botanic Gardens. So now let's talk about the pushback, the cons. So it's a walking distance about 4 to 5 minutes from the project, and technically actually it's further away from the MRT station, unlike the rest of the other nearby older projects, which is like Queens or Sterling residences. But let's be real, don't be so pampered. It's fully sheltered, okay? But that's why the trade-off is so minimum. So Queenstown is also a very mature estate. So do not expect any URA transformation in this area. But still, in the future plot of lands in the wider area actually will be a price catalyst for this project.
Okay, but there's only one primary school within 1 kilometer, so which is Queenstown Primary. This could be a drawback for those parents that are actually chasing top schools, but given the pricing, it will still appeal strongly to city fringe buyers that's less concerned about school proximity. Next, we also layer in the annualized gains from these past resale condos to see how their past resale performances, and we were actually quite surprised. The health check looks so strong. Most condos in this neighborhood shows consistent 100% profitability. Projects like Sterling Residences, Margaretville, Queen's Peak is 100% profitability.
Some even earn a profit of more than 1 million, right?
Yes, 1.198 million to be exact. Next, even if we look at older condos like Queens and Alexis, we also see Queens posing 100% profitability over the 2 years, and Alexis being it a freehold project but smaller units, it still sees a healthy 77% profitability in its transactions.
So actually, I'm very confident, when I saw these matrices. So it's like doing a body health checkup. So you know that actually all your markers are doing scoring perfect score.
Yes.
So these strong support indicators will definitely boost the confidence for investors and own stay. And this area actually is a great investment if you look at all these past surrounding condos transactions and the profitability. So here's the FOMO factor. If you have missed out Penrith launch, so what's next? Future OCR launches are already trending high. Lakeside Drive, the land bid was 1132 PSF PPR. The launch price is expected above 2,200 PSF.
And Chan Grove land bid is 1,376 per square foot. We'll be expecting the launch price to be above 2,006 per square foot.
Another Tran Grove Parcel 2, land bid was 1331 PSF PPR. The launch price we are expecting above 2006 PSF as well.
Yeah, and the next one, the Bayshore, which land bid at 1388 per square foot. We'll also be expecting it to be launched about 2008 per square foot. And those land parcels that we mentioned are all in the OCR.
Yes. So the last one, which is RCR, Thompson View, the land bid was 1178 PSF PPR. The launch price we are expecting above 2005 PSF.
So with the Penrith position in the RCR at 2006 per square foot, it's actually quite aligned to
The RCR.
the RCR, and arguably it's more attractive than paying OCR prices for these less prime locations.
Yep. Now let's score the Penrith. Location and connectivity.
9/10.
Developer and design.
I'll give you a 7/10.
Pricing and value.
7/10. Investment and potential.
8/10.
Livability.
7/10.
So overall,
Overall we'll view it as overall we'll score it at 8/10.
so let's recap the big three takeaways from the Penrith. First, prices are anchored solidly, with resale benchmarks in Queenstown already trading near the indicative launch levels. Second, strong catalyst, $1 million HDB upgraders and a healthy rental market from CBD and One North tenants. And third, you're buying into a proven location with good track records of profitability. It's not just hype.
So on our scorecard, the Penrith earned a solid 8 out of 10. And honestly, it's not easy to get it. It balances the safe entry pricing, long-term upside potential, and everyday livability. The fundamentals are there, the demand drivers are clear.
So is Penrith worth the wait after 5 years in the Margaret Enclave? We'll say
Yes.
It's one of the most exciting RCR launches to watch.
So if you want the latest price list, the floor plans, or want an honest opinion, give us a call, whether this fits your goals or not. We are happy to share what we know, and maybe we can even help you to spot the next big opportunity.
So don't forget to like this video, subscribe and hit the bell so you won't miss our next property insights. We'll continue cutting through the hype to give you the real insights into Singapore property market.
See you in the next Property Insight.